The new tax bill that just passed is definitely going to impact you if you're approaching retirement or you're already retired. And some of these changes will be very beneficial if you're interested in lowering how much tax you pay during your retirement years. So in this video, I'll share an overview of the new changes in plain English, and then I'll show you a few strategies to think about implementing in the next few years to get the full benefit of these changes. We actually just have a 4-year window to take advantage of a few of these changes before they go away. So here's a quick overview of what's changed, and then I'll share the specifics of how you can take advantage of these changes. At a high level, we've got lower tax brackets. So this is just high level. But first, we've got lower tax brackets. They're staying as they are. Second, we've got standard deductions are going to be higher, and even itemized deductions benefits are being added. And then third, there's some temporary benefits just through for the next 4 years. And that's mainly for retirees or seniors. And that's the important part. There's a 4-year window here, and there's a few things we can do over the next 4 years that's really going to help you. So let's start with tax brackets. Back in 2017, tax rates were lowered, but they were set to go back to where they were previously in 2026. Now, the new law pretty much cancels that increase. So the lower tax brackets, they're now here to stay, and that opens up more years of tax planning strategies that I'll get to coming up. The standard deduction is also going up. In 2025, for married couples, it was $30,000. And then moving forward, it's going to be $31,500. And then for single, it was $15,000. It's moving up to $15,750. Now, if you're 65 or older, there's even more good news. Married couples get an extra $1,600 per person. So that's $3,200 extra tax-free for a married couple. And then single retirees, they get an additional $2,000. And these are on top of your standard deduction, helping you keep even more of your income. Now, here's where it gets even more exciting. There's a brand new deduction called the senior bonus deduction, and that's worth $6,000 per person over 65. Or if you're a couple, if you're filing jointly, that's $12,000. And that bonus stacks on top of everything else. But the catch is it's temporary. It's only going to be around for the next 4 years. And it's also worth noting that there are phase outs based on your AGI or adjusted gross income. So single filers, it begins to phase out at 75,000 and is gone at 175,000 of AGI. And then married phase out begins at 150 and then is gone at 250,000 AGI. Here's an example just to see what sort of impact this is. Imagine you're a married couple, both 65 plus with $100,000 income. With all these deductions combined, the standard, the age-based, and the senior bonus, they can deduct up to $46,700. And what that means is only $53,300 of the $100,000 is taxable. So the big ones here are really senior bonus and the extra 65 plus. Those two things really increase the standard deduction.